Hi guys, welcome to day 18 of the 60-day DAS Trader Challenge. So today is pretty much a full month of trading. So we're 33.33 reoccurring percent of the way there. So 4 weeks is 20 days, but I did miss out on 2 days. So that's why I still count it as a full month, so to speak. Excuse me. Now, today I got away with it. It's as simple as that. I got away with a bit of murder, I would say, even if you want to be, really kind of picky about it. I took 7 trades, but when you see some of these entries, they were just really extended. So what I was doing was basically chasing, and I actually felt I had FOMO. As soon as the market opened, I saw a couple of trades like MU and HAIN and Cara just kind of dropping, jumping off a cliff. And I was so eager to get into those, so ready just to go. But I held off until the first 5-minute candle close. You can see my first entry here was literally 13 seconds after that first 5-minute candle closed. Let me just bring this down a little bit. But overall, not a good day of trading. Yes, I made a profit of $405, and you would think, that's a really good day. I made $146 shorting Cara. I lost 422 on HAIN, which we'll go through. I made 380 on MU, which was a really good trade, but shitty risk reward. Nike, excellent long trade. I very rarely go long, but this one just worked out beautifully. And Nvidia, I got in for a scalp and I just got out because I just wanted to get out of it, and I was actually in a loss for a while. So that was my day. Let's go through them one by one. Let's start off with Nvidia. Actually, no. Let's start with Cara. We'll put this in vertical order. Cara. All right, so Cara. So this was $146 short. Now, my risk reward here was actually quite good. Now, I was watching this, and this is one of the trades I said I was just watching at the gates. 9:30, which is here, came along, and these had a bit of a week, so it was undecided which way it was going to go. And then when it lost the VWAP and the 9 and the 20, and it pretty much touched the 50, I thought, okay, it looks to potentially be going down, but I still didn't get in here, which now on the back of it would have been a great idea, but I just held on a little bit longer, and I got in here. Now, I've got to be honest with you, I got in here at what it was, $18.03, thinking it's going to drop below $18 and it's going to get to my target of $17.20, or at least, start getting down there. What it did was it bounced up again, and I added to my position here, $18.30. So I was holding a pretty decent size, 400 shares. And what happened was that actually I did it in a third time, which I didn't actually put down here, but I added in a third time, which is pretty risky, right? I mean, now I don't know what my average is here. I mean, probably about $18 or something, right? Actually, it would have been. Sorry, what's this? This is 18. Oh, okay. Let me start again. I'm pretty sure that my first short was here, my first position, 17.90, which I didn't have here. Then I added in another one at $18.03. And then I added a third time, which is here, $18.30. So 3 positions, and I'm adding pretty much 200 shares along the way. I think it was 200 shares. I mean, we can look here. 200. So the first one was 200. Then I added 400, and then I did 200. Yeah. So I was holding an 800 share position, which is a really big position. That for me is full size. And I rarely get up that high at the moment, as I'm still learning. So I was a bit nervous. I've got to tell you, I was a bit nervous holding this. And my stop loss was just about, just a little bit above actually where I added. And, my thinking was, I'm probably going to get stopped out of this trade. And if I had stopped out, it actually would have been good in terms of learning, because have a look at how far away I got in here from my stop, right? So my stop, so this is the candle I got in. So really my stop is there, right? So my stop is there, which is, I don't know, like 1860 or something. And I got in here, which is whatever it was, 1830 or 1810. So I got in like 40 cents 40 cents away from what would have been a good entry. Now that is terrible. That is really, really bad because your risk reward goes down. Now I got away with it a little bit, simply because this kind of tanked a fair bit, and this was my target. But the point is, you don't want to be taking such extended trades. This is when I had a feeling that I'm not trading well because I'm not getting good enough entries. I'm really chasing because I just, you know, I want to have a good end to the week. I want to make a bit of money, and I had a feeling that this was going to drop. But you know, the thing is, and obviously later, I mean, I knew beforehand, but I wasn't thinking about it. Look at this. This was already down 25% on the day in pre-market, right? 25%. So it's tough to expect the stock just to plummet down if it's already been 25%, if it's already down 25% of the day. So I've got to take into account next time that if it's down 25%, it's not just going to crash. You know, you know, there are buyers that are going to be holding this up. So what I could have expected, you know, this is probably best case scenario where you just expect it to crack a little bit, and that's really all I should have expected. So this target, you know, was way off. I mean, it's not something that is realistic. So that's why it turns out to be a good risk reward, but it never got there. You know, it really only cracked just a little bit. I mean, yes, you know, if I held on a little bit longer, and I'm finding a pattern here that when I take these trades quite quickly and I get out of them. But if I held on to, I don't know how many, I haven't done the analysis, but if I held on to some of them, most of them, all of them, I don't know, a couple of them, most of them I would say, well, let's say 50%. They do reach that target somewhere where I've set it, but it just means I've got to be a little bit patient, and I'm just not quite there yet. So Cara was a trade where it was the first trade of the day, and I thought, not a good start. I mean, a good start in terms of money, but not a good start in terms of following discipline. So that was Cara. Then we had Hain, which is here. Now, Hain was a terrible loss, $422 loss. And why did this happen? Well, it's pretty simple, really. Once again, I did the same thing as I did on Cara. I got a really shitty entry. Look at this. This is my stop, which is at $38.95. Right? This is my stop. This is my VWAP. Look how far I'm getting in. I'm getting here. I'm buying here, which is at what? $38.50. And where's my stop? Here. So I'm 45 cents, almost half a dollar away again from my stop. That's a terrible entry, guys. I should have been getting in here, or you know, close enough to the VWAP if I was going to contemplate taking this trade, but surely not down here. I mean, here you're asking for trouble. What you're asking this to happen here is that you're asking this to pull back on you, which it did, and you end up in a loss. And this is really just of my own making. I mean, yes, I could have covered a little bit here, but obviously you're thinking, you know, this is, look, it's down, it's going down. You're thinking it'll continue that trend, right? But you know, a white candle here with a really long wick to the bottom, but then the buyers kind of held it up and it closed. So this candle tells you a lot, right? This candle opened here. It went all the way down to the bottom here. And then the buyers came in and it closed here. That's why it's a white candle. It's a green candle. So that straight away should have been a bit of a sign that I need to be careful. And this is probably where I should have gotten out. But I didn't. I got stopped out here way above my VWAP at whatever price that is, $39.10 or something. And I think that was a $270 loss, right? There and then. So I made $146 on Cara, and I just wiped that all out, and now I'm minus 130 after literally 10 minutes. So I'm thinking to myself, this is not a good start. I mean, just terrible entries on 2 trades, 2 out of 2. And that's not something you can sustain and continue doing and expect to be profitable. But what did I do? I did it again. I mean, talk about being stupid. So I got in here again. I mean, this is even a worse entry than this one. I mean, you know, looking back on it now, I'm just scratching my head. I mean, I really got away with it today, but you know, I've got to be careful, and I know I'm going to learn from this, but you've got to have better entries, right? You don't want to be getting in here when it's this far away from your stop loss. Once again, you want to be getting in here, you know, when it you know, falls below the VWAP or kind of around there, but certainly not this far away. I mean, asking for trouble. And that's what happened. And it got me out again. It stopped me out. So, you know, that's 2 out of 2. And on this one, I lost $152. So on these two trades, I lost, what is it, $422. $422 on 2 trades within a space of 5-10 minutes, all because you're taking silly entries, right? So I've just got to learn from that. And this was a really big position as well. I mean, this was 600 shares, which is a lot, you know, when you think about it. And look at this risk to reward, 0.57. It's not even 1. It's not even 1 to 1. It's half to 1. Just terrible, you know. I don't know, looking at that. Then the next one, MU saved the day. No question about it. MU, I traded 3 times. This had just a really nice kind of fall off the edge of a cliff. I used the same stop for trades 1 and 2. So this is the first trade, the orange circle. This is the second trade and the third trade, all short. And this I got in literally as soon as the market, as soon as the first 5-minute candle, I think, closed. I think this is the one that I was telling you guys about. MU, 9:35. There you go. 33 seconds after the first candle closed. And this was a poor risk reward because it was only really 1 to 1. I was looking to make 32 cents, but I was prepared to risk 30. That's not a good risk reward. You know, there's a common thing here, guys, right? I got into these trades really late today. There's no ifs or buts about it. Then the second trade, better, right? I got in here, which is a little bit better than getting in this low. And this was just a really good textbook trade. This is a solid one. This one I'm proud of. This one, I think it was also 400 shares. There you go. It wasn't still a great risk reward, but you know, the fact that it was going my direction and I was able to scale out of it 3 times and even below my target just shows you how weak the stock was. So it's really only thanks to the fact that this stock was really weak that I made money. And I actually said that. I said, once again, poor entries could have cost me. I got away with it this trade because the stock was so weak, but next time I need to get better entries, right? So this is now, you know, the 3rd or 4th trade I'm in today, and I'm doing the same thing. And this was just because I saw how weak it was, and it just kind of, because it was falling, I thought I'll take a little bit of a trade here. And I think this was, I don't know, I have to look. I think it was maybe 100 shares, 200 shares, I don't remember. But this was obviously a lot smaller trade because of the fact how far it already had gone down. And I covered half here, which was nice, and another half here. And normally I leave a bit of a sliver on, like 50 shares, just to see where it takes me. But on this occasion I didn't. You know, obviously could have, because it still went further down. It was quite weak. But anyway, you know, that kind of got me out of a hole. That was $380. So that was that. MU, and then Nike. We traded Nike because it had really good momentum and had really positive news. They decided to deal with Amazon. So, you know, that is in itself is a big deal. And on the back of that, Adidas kind of fell down. But Nike, and I was watching it pre-market, and one of my friends in our chat also said, you know, have this on watch. I didn't actually have this on watch at the beginning. But, you know, look at it come out of the gates. Boom. You know, a lot of volume coming in. And this thing just kind of splurted out of the gates. And I was watching it here, and it was just so strong. I thought, it's so strong that I'm going to take a position here. I could just see it going up a little bit more. And my plan was for it to get to $58. So I got in at what it was, $57.57, 200 shares, and I added a couple hundred more when it just dropped a little bit. And actually, I added twice. So my original entry was here. Then I added here when it fell a little bit, and then I added here just because I could see there was going to spring upwards. Now, what I've gotten better at is actually buying long. When I used to buy longs, I used to buy on at the high of day, which was obviously just the worst thing you can do, because that, if you know the ABC pattern, you know the ABC pattern is that something goes up from a position of A, it goes all the way up to B, which is the high of day, then it drops a little, which is C, and then it cracks over and it goes up higher again, and that's position D. So this is just a simple ABCD. It's really like a bull flag. So I saw this kind of out of the gates. I thought, no, I'm not going to buy at the high of day, although I was tempted to because that's what I used to do. And I waited for it to pull back, and I specifically bought this on the pullback. And I specifically added here. So this wasn't out of fear. This was all calculated and planned. And this was also an addition just after I think over the $1/2 mark. If it goes over the $1/2 mark,